Hello and welcome to the daily report from IG Markets, the 6th of June 2012. So overnight we saw a pretty whippy session, to be honest. I mean, we did see equities up. The S&P was closed pretty close to its highs on the session after some very strong, or sort of say stronger than expected, services ISM numbers, which put a bit of strength into a bit of a bid into the US dollar against the yen. But overall, I mean, beginning of the session, we did see a bit of a collapse in the euro. We saw 125.32 going down to about 124.10. The German PMI numbers a little bit disappointing. The factory orders as well coming out a little bit disappointing. And then we saw one of the Spanish finance ministers coming out and suggesting that Spain effectively has been frozen out of the funding markets. Well, obviously, we've seen recently a spike in Spanish yields, and the Spanish are really looking for the Europeans to come out and inject direct capital into their banks. The Germans on the other side are saying, no, this can't work at the moment. We need Spain to accept a bailout on a sovereign level, because under the current terms of the treaties at the moment, the Spanish banks cannot accept funds directly from different nations, or these bailout funds, the EFSF or the ESM, because it seemed that their government is still very much liquid at the moment, so they have to go in on a sovereign level. Spain is saying that we don't really want to go on the sovereign level at the moment, although all the indications are they are warming to it. I think all eyes were very much focused on what was happening in the G7. Now, we didn't expect too much to come out of that. You're never going to get too much coming for a conference call, for a phone conversation. But I think the markets are now saying we are seeing this as a stepping stone into Mexico, the G summit, the G20 meeting there, and of course up to the big one, which is the EU summit at the end of the month, which then they'll be able to price in the data that comes out of the Greek election. So people were looking at that, the G7 nations getting together, coming out with some sort of coordinated situation there, which we don't know about at the moment. But I think people are starting to warm to that situation, that perhaps by the end of the month we are going to hear some sort of concrete measures being put in place, which could probably be more expensive and certainly more radical than what we've previously been used to. But the market seems to be nicely supported, as is the increased speculation of quantitative easing. Now, Mr. Hilsenrath, who's a Fed watcher, he works for the Wall Street Journal, has written an article which seems to be getting quite a lot of airplay in Asia, and probably seen a part of the reason why we're seeing some good out of hours buying in some of our FTSE DAX and CAC. But also US futures have started moving up and gold prices are moving up. He's given a more balanced argument about quantitative easing. Now, this is very much in tune with what we're seeing from Goldman's, from Barclays, from Morgan Stanley, who are saying that the Fed are likely to announce some sort of quantitative easing package or hint at further measures at their June 19th and 20 meeting. So something very much to keep your eye on. We've seen the dollar weaken, the Australian dollar's moved up a little bit here, and all eyes now fall on their GDP, on Australian GDP, which comes out very shortly as well. The market's expecting 0.6% gain there. So everyone's really looking at what's happening in Europe. Nothing really out of the G7. People are very focused on what's happening in Spain. Will we get a capital injection of the banks? Will we see swap lines or the EFSF being used to give some sort of credit swap line coming through, a precautionary measure? Are we going to see Spain go and tap the market? And we know there's a bond market, a bond auction later in this week for around about 2 billion on the 10-year, which is going to be looked at very, very closely indeed. But as it stands at the moment, markets are pushing up gradually, very gently, and I think part of it's down to these slightly increased QE expectations coming through.